How's it going? Welcome back. It's Jonathan. Okay, so in the last video that I had produced for you, I did give you a kind of a little bit of a glimpse into one of the cyclical models that I'm running for Bitcoin. And I wanted to give you an update on it because I've been running it for now for about 2.5 weeks. And I just want to show you how it works. I think it's pretty fantastic. So the way that the model works is it's currently turned on to automatically update. So if I go forward in time, basically it's going to change the model. As you can see right there, the model changes as time goes on. So what I have been doing is basically setting it at the start of each week. For example, either Sunday to Sunday or Monday. I've been doing it actually at the end of Sunday until the end of next Sunday. That's the way I've been doing it. So I wanted to back test this for you and just show you how this model has been functioning. And we'll do it since the 19th of January. So I'm going to go back to 19th of January. I'm going to get rid of all this. Go back to 19th of January because 19th of January will start the week. You can see that the model updates, as the market moves on, the model updates and it tries to correct itself. We don't want to know what has happened after the market's updated. We want it to update and be blind. So if we do this, what happens then is it becomes blind, which means that the model is changing and it's actually doing its forecast. So it's taking all these cycles down here and it's saying based on price where it is at the moment within the cycles, as you can see, the curve is slightly changing. So the 19th is the Sunday. Let's go back one. 19th of January is the Sunday. So we want to be tracking from 20th to 26th. So 20th to 26th will be in here. So we'll end it at the end of basically midday to the end of Sunday. We'll pop this into Settle BC. And this will be basically our forecast. So the blue and the red line is the forecasted curve for the month ahead. Sorry, for the week ahead, not the month. I'm used to always doing a yearly forecast, and then I'm used to doing a monthly forecast. And now I'm doing a weekly forecast. So I'm getting a little tongue twisted on what I'm actually producing here. This is just the week ahead. So the red curve suggested the mark was heading down into around the 21st. And then we were heading up into a possible top around the 24th. Then we're heading down into the 25th, up into the 26th before ending the week lower, so going out into Sunday lower. The blue curve, which is a slightly faster moving curve and produces a curve based on shorter term cycles, so we're getting like more of a move here. It was looking for a top on the 20th, and then it and the red one, which is a slower moving curve, was looking for a low around the 21st. After that low occurred on both of the charts, on both of the curves, we were moving higher. As we can see here, we have a bit of a directional bias down where the curve was actually pointing up. So in this case, this one here we can see is a direct inversion. So this curve here directly inverted up. And if we flip that, so instead of going bottom to top and we flip this curve, we can actually then go top to bottom, and we can see if we flip all this, it'll be going down as well. And then it resyncs up at this low here. So this low here resyncs up down here. Then we get a push up into these values here. And then we can see that the markets sort of go this way. And at the end here, we have an inversion again. Okay, inversions are going to occur, and I tell you all the time that inversions are part of the game. It's really, the way that we can confirm it's an inversion is because it both starts and ends at the exact same point. So instead of going from high to low, the market basically went high to high. You see how that works? So the cycle says high to low. However, the market went high to high. So that's a direct inversion on this move. So once the move ended here, and we got this red one, which is a longer term cycle, and it's pushing the market higher, it basically made an inversion on this shorter term cycle. So the timing of these cycles are correct. However, the price action had inverted, and we need to be dealing with that. For example, if you were looking for a low down here and you got a top, well, you wouldn't be buying at that point because that would be an inversion. We would then be waiting for the market to come into this little pullback here, whether it continue to move up a little higher and then pull down. Basically, we would be waiting for this pullback here to occur before we went into the next bullish rush. And we can see if we were looking for, whether you do all your technical analysis, the cycles just give you the directional bias, okay? You got to still overlay your technicals. So whether you do your order blocks or your SMC, your Dow theory, your Elliott wave theory, whatever you're using at the time period, try to get it to confirm with the cycles, okay? So support and resistance right here, you would have possibly bought with stops below the lows, and then you would have been expecting a bullish run higher. And then we can see that these move down. We do get slightly a move higher here. As we can see, we get a little bit of a push up where the cycle sort of ends and pushes higher, but it swiftly moves down again. Anyway, so that's week 1. So that takes us out until, let's go back, the 26th, and the 27th starts the next week. So without even showing you the data, I'm going to put this right here. What it's going to do now is it's going to line up all these cycles again and correct any anomalies that it had. And now we're going to move forward 1 week. And you can see the red curve was saying a possible low down here, possible high up here, possible low down here. Blue curve is a bit more volatile, so it was also suggesting a low. We got a slight inversion here on this low to top, and then they were going up. Don't really have much market action that I can make an excuse for here. Do get a high here, but it doesn't really drop into this point, sort of still travels higher. Let's keep moving forward. This one comes down, so the blue one comes down to this point here. We can see that the shorter term cycle came into a low. We still have a longer term cycle pointing higher. So both of the cycles are now pointing higher. Okay, we're going out for just 1 week. So this is going to end us at the 26th. Oh, sorry, January 27th to the 2nd. Okay, so we're starting on the 27th, we're finishing at the 2nd. So we'll go out and we'll finish it at the 2nd, at the end of the 2nd, I should say. And this would have been the directional bias. So as you can see, each day as we progress, we'll be looking for these curves. The longer term curves, they're sort of low in here. The shorter term curve actually suggested a top, which is an inversion on point. Longer term curve pointed the market higher. We got a shorter term curve right in here, which brought us the low. And then we were looking for both curves to top out here before they both sold off. We can see that the blue curve suggested some positive energy in here, but the red curve definitely took over. So if we were to progress this now, we know we're at the 2nd, which is Sunday. So now we're going to go from the 3rd to the 9th. So we're going to now go from the 3rd. We're going to update this, so it's going to correct any anomalies that it saw in the curve, and it's going to forecast out. So to begin the week, we were looking for prices to primarily head higher, okay? So that they were coming off a strong sell on the 3rd of February. The curves were suggesting a move higher into around the end of the 3rd day and into the 4th before a slight sell-off. As we can see, the curves are selling off. And then, so we get sort of an inversion here where the blue one's heading down but the red one's heading up. So slight inversion in the curves, or I should say polarity flip. However, we can see that this sort of market direction is following this at the moment. So the market's coming down. This point here where it goes flat is where the curves start to curve or start to point up. Points up around this point here, but then starts coming down, comes down to this point. So this up move here was very short-lived. We have the move on the red one heading up here, but it's very short-lived. Heads down is this blue one. The blue one heads up into this point up here, and then heads down again. Now it looks like both curves are pointing up. Okay, the blue one's starting to point down. So the blue one topped out here. We can see that's a slight inversion in price. The red one suggested a top slightly on during the day. And the blue one also then suggested a low, basically around where the top occurred on that same period. So we've got two curves pointing in different directions here, which is creating an issue for us because we're unable to correctly determine the trend. All right, so I'm going to go out now to the end of the week. So we started on the 3rd and we're going out to the 9th. So we're going to finish at the end of the 9th. And as we can see here, after this red curve topped out, we can see that the market had definitely started to swing down in the red curve's favor. Both curves here are pointing higher into the 10th. Okay. So the 10th, we're going out to the 16th. Now we're going to update it so that it can recalibrate the cycle. Okay, so just the cycle could be off by a couple of days, it could be off by a couple of hours. So what this whole thing is doing is basically recalibrating it for the next period, and it's using the LBC or look back period basically to recalibrate it. So we're going to go to the end of this period, and now I'm going to bring it out the whole week, and we're going to take a look at the whole week. So this is taking us from the 10th out to the 16th. So go out to the 16th. Alrighty. So blue curve, we'll just track the blue curve for now. Blue curve suggested two tops. So one was occurring on the 10th, one was occurring on the 11th, early in the morning. We see that we got an initial top, and then we got a secondary top a couple of hours before. So both of them occurred a couple of hours before the actual event. Then they were going down into the 12th, up into the 12th as well, then down into the 13th. So this is the CPI price action. And then they were heading higher. So we can see that the price action actually topped out several hours, actually about 24 hours prior to the curve. However, not to worry, we were still being supported on the upward move by the red curve. And then they were falling lower. Okay, we can see price action begin to fall lower. And then both curves actually pointed higher. But however, we can see that price did not follow suit and go higher. So right here, we have a bit of an inversion in price where price is not directly following the curve. And what that does is actually brings us up to our current week. So our current week starts on the 17th and ends on the 23rd. So I'm going to update this to the 16th. You can see that it updates the curve to get a better price projection. And if I go forward to the 17th, again, updates it. So each time I move this around, it slightly updates that curve. So I'm going to show you this week's price action right now. So we got the 17th out to the 23rd. So let's go forward. And this is it. Now, actually, when I put this out, I said that this week was a little bit confusing because we've got two curves doing two different things. We got the blue curve heading down into a low on the possible 18th. Both of them top out on the 19th. The blue curve then comes down to a low on the 19th. However, the red curve makes its final low on the 21st in direct opposition of the blue curve on the 21st. If there's anything we know about tracking the sun and using our turn dates, what we'd be watching for is a possible low to occur if we're bullish. So if we're bullish on the markets, we're possibly looking for a low to occur in the next 24 hours. And or a top. So I'm going to build two scenarios, and I don't believe I have a drawing tool right now, so I'm going to open up Paint. Alrighty, bear with me. Alrighty, so if we're bullish, obviously we want to see the market be pulling higher, right? The thing is that we want our turn dates to be occurring on the lows. That's the suggested market curve. And if we have a turn date and we're looking for a turn date to occur, if we are combining both theories, we can see that this is a turn date on the 21st cycle turn, and we also have a cycle turn on the 18th. So that would be a bullish case if I bring this up. If, for example, so let's just say this is the 17th, this is the 18th, then we have the 19th, then we have around the 20th to the 21st. Sorry about my writing, I cannot use a mouse for the life of me. We would be watching possibly for a top to occur around the 18th. So that would be a cyclical top on the 18th, not a major top, not a stock market crash top, not a Bitcoin crash top, just a cyclical top as it comes up into the 18th. Then the 19th doesn't really show much action, comes down into the 20th, into that 21st, might roll over into that time period before heading up. The ideal situation is that we get our major tops, which is our turn date tops, on the bottoms. Or I shouldn't say turn date tops, our major lows on the bottoms if we're bullish, and if we're bearish, we would get those on the tops. So here, let me just go ahead and delete this. Here is the scenario I always tell guys, and I teach this one in the time by degrees method. Tops are bad, bottoms are good, okay? So if we are looking at a cycle like this, or a curve like this, okay? Let's just draw that out. If we are expecting that the market is going to go down, or if we are getting early warning signs that the market's going to go down, our turn dates will appear on the tops. This is most likely what's going to happen. And I've noted that if we get tops around 3 or 4 times, the market is going to sell off quite rapidly. Conversely, if we start getting bottoms on these turn dates, so we get a bottom here, we get a bottom here, we still see that the market pushes lower, so that's just normal market behavior, but we also get another bottom on a turn date. That generally means that the market is getting ready for its next push higher. I know that if you've never studied time by degrees, the program that I put out, or if you've never studied time in general, this concept can be a little bit confusing or a little bit hard to understand. But it's one thing that I did figure out probably about 4 or 5 years ago when I was watching these turn dates that Gann gave us, was this methodology or this interpretation of these turn dates, and it really unlocked another theorem for me on how we can actually use these turn dates to our advantage. the general consensus on turn dates is that they go high, low, high, low, high, low. They say if you've got an accurate working cycle, you'll get one turn date here, one turn date here, one turn date here, one turn date here, and so forth. However, what happens in the case when the market doesn't actually make high, low, high, low, high, low? I then saw that tops were all coming in a row if we were going to be bearish, and then I saw that the lows were all coming in a row when we were going to be bullish. And that was another key that I believe no one else had to these turn dates, and that's why I've taught the exact strategy on how I do this in the Time by Degrees course. Because I really don't know. Like a lot of people come into that course and I really don't hear much feedback. Some people, like for the amount of people that do that course, I don't know if people are actually using it to their advantage. Because some people say, holy crap, this has changed everything I thought about the markets. And then someone will enroll into it and I won't hear a peep out of them. They'll take the course and I won't hear a peep. And I go, are you using it? Is it, is it helping you? But that was one of my most sought after strategies, and I believe it's probably one of the best for predicting turn dates is the Time by Degrees method. Anyway, I'll cut this video off. Just wanted to give you an update and let you know I'm still live. And yeah, I'll talk to you soon.